Good evening, guys. It is Friday, February the 9th, and in this presentation, I want to talk about why do you lose at trading. And guys, to be perfectly honest with you, when I say why do you lose, I'm including myself in that. I'm not accusing any of you of anything that I've not experienced myself. Okay? So this presentation is going to be entitled Why Do You Lose at Trading and How to Fix It. So 10 reasons you lose at trading and changing your expectations. So the first reason in this presentation that I want to talk about is false expectations, guys. This isn't a get rich quick scheme. The second reason that you lose at trading is over leveraging. The third is chasing losses. The fourth reason in today's video are emotions, frustration, boredom, other emotions. The fifth is the prop firm model and differences to live brokerage account trading. The sixth is moving your stop to break even too early. 7 is not letting winners run and letting losers run, so cutting your winners and letting your losers run. Number 8 is experience and trading like a professional. Number 9 is not having models or trading without a game plan. And number 10 is overconfidence after winning many trades, otherwise known as gambler's high. So I'm sort of using this PowerPoint presentation as a primer for me to speak on these topics. So basically, they're just designed to prime me to speak on the topic. Guys, the first reason why you lose at trading are false expectations. So this isn't a get rich quick scheme, and you don't need to be right all the time, and you need to change your time frame. So guys, you are not going to get rich quick day trading. And even if you have, guys, I've had trades where I've made thousands of dollars in a single trade only to go back and turn around and lose thousands of dollars. So you have to change your expectation from, this is a get rich quick scheme to this is a job, this is a career, this is something that hopefully you should be equipped to do for the rest of your life, especially if you enjoy it. This should be a hobby. This should be something that you enjoy. Day trading should not be so stressful that you can't sleep at night, or the losses mean something to you, guys. You've got to change your expectations, monetarily speaking. For many of you, you might be able to put together a $2,000, $5,000, $10,000 account, and here's what I'm here to tell you. If you're trading on $2,000 to $5,000, maybe you can expect to make $50, $100 in a day. A great day would be maybe $200. And conversely, guys, you're going to have losing days, but your losing days should be $100, $200. If you're trading a larger account, you can just bring those numbers up. But guys, the market is going to be there tomorrow. It's going to be there on Monday. It's not going anywhere, and you don't need to get rich quick, guys. I have never advised, and I will never advise any of you to quit your day job, not to have other sources of income. If you are retired, if you have a Social Security or retirement plan that you live off of, and you can day trade for fun, similar, guys, I think it's still similar, even if you're older. You need to have a long-term time horizon. So if you start day trading today, when can you start to make decent money day trading? The truth is, guys, years. You need to change your time frame from I want to make a bunch of money today to I want to make a little bit of money over time, and I want to basically generate another salary for myself. That's it, guys. This really is a long-term thing. For many of you, if you've already gotten into day trading, if you're hooked into day trading, you need to be in a position to where you can financially do this for years, because you're probably always going to be interested in it, like I'm always going to be interested in it. And so you need to change your time. You need to change your expectations. The biggest part of going from a losing trader to a break-even trader to finally maybe a profitable trader, everything like me is just losses and then sometimes, periodically I win and then, the cycle repeats. For me, it's mostly losses. But the point is that you have to change your time horizon. Okay? So, false expectations, guys. When you are watching people on YouTube that are trading big accounts, trading big size, you cannot allow that to influence what you are doing. More likely than not, guys, you cannot mimic what you are seeing people on YouTube do, and you need to be aware of that. So, guys, you need to change your time horizon from this week to, how about this year? Okay, can I make 50% in my account in a year? Can I not lose money for a year? Can I go 3 months without blowing my account? Guys, can I actively day trade every single trading day and not blow my account? I promise you, if you change your expectations to be on the longer term and treat it like a job, you're going to perform a lot better than what you're doing now, or you're probably doing now. Number 2, guys, over leveraging. So it goes without saying that you have to be careful with the amount of size that you're putting on. But for every one of you, it's going to be different. What is over leveraging? Well, it obviously depends on how much money you have. What I would say is it is over leveraging if you feel like that stop loss that you've put in the market, if it were triggered, if you were to lose that money, it would hurt you. Okay, if it makes any difference to you whether a trade is a win or a loss, you're over leveraging. And so for many of you guys, I'm just going to be honest with you. For most of you, it's probably like I need to trade one micro contract, maybe 2. Okay, that's going to be for many of you listening to this video. Not all of you. Some of you are probably doing pretty well financially, and for you, if you have more money, guys. You need to be even more careful, guys. More money, more problems. So, over leveraging, in my mind, what is it? It's when the stop loss, if it would hurt you emotionally, if it would make any difference to you whether you won or you lost the trade, then you're probably over leveraged. Number 3, chasing losses, guys. If you've made the wrong decisions trading in the past and you've lost money, it's not coming back. I've lost money trading. That's not a secret. I haven't made a secret in that. I win more trades than I lose, but overall I've lost because I have outsized losing days. And guys, the money's not coming back. Okay, you need to accept it. It doesn't matter if it's $1,000, if it's $20,000, if it's $100,000. Guys, the money's not coming back. And even if you do make the money back, it's not the same dollars. You still, if you lost $100, you lost $1,000, and you make $1,000 back, that's not the same $1,000. You still lost that $1,000. Okay, every single trade, the slate is wiped clean. A past trade has no impact on a future trade, and whatever your account balance is right now, that's the money that you have. You don't have a dime more, and it doesn't matter if you had twice as much the day before. The losses aren't coming back, guys. You have to learn to accept your losses. You are going to take losses. It is statistically inevitable. You will take losses. I'm here to tell you that you will take losses. And if you see a red number in your account, I know for me that's a big psychological trigger. If I'm down $200, I really badly want to chase that money back. I want to chase it back, right? Guys, it's not coming back. It's not coming back. It's not. So stop chasing it. If you take losses, you take losses, guys, and it's all about changing your expectations. If you have the expectation that I'm an amazing trader, I'm never going to take losses, well, then you're going to be really hurt when the market proves you wrong and you do take losses, and then you're going to want to chase them back. So, guys, for many of you, this is going to be a matter of humility. Number 4, emotions. So your natural human emotions are the enemy trading. Apathy, boredom, frustration, anger, sadness. These are normal human emotions, and they cloud your judgment. And frankly, trading is just not the place for emotions. Trading is the place for long-term planning, and there's a reason why every single bank out there, they have risk manager guys. Professional traders have full-time risk managers that will, you have a maximum daily loss. And there's nothing wrong with hitting your maximum daily loss, but they have full-time risk managers. And guys, these are professionals. These are people that work for hedge funds, prop funds, banks, bank traders. They have full-time risk management teams, and all they do is monitor how much risk their prop traders, their desk traders are taking. And similarly, guys, you have to do that with yourself. Your emotions, if you feel frustrated, it's time to take a break. If you feel angry, if you feel, I think that one of the most sabotaging emotions for me is just boredom. You're just trading because you're bored. Guys, boredom is not a reason to take a trade. And if you're upset or you're bored because the market's not moving, you can't make it move. There's nothing you can do. And so you might as well find a YouTube video or something else with which to entertain yourself other than the market, because you can't make the market move if it's not moving. So, guys, there are times and places for your human emotions, but it's not in trading. Number 5, prop firm model. So, guys, I'm not telling you what to do with your money. And if you want to trade for Apex Trader Funding, Topstep Trader Funding, and you want to try a prop firm, I don't think there's anything wrong with that necessarily. But understand that, that is making it more casino than a real trade, guys. There's no reset button on your live brokerage account. Yeah, you can make a salary, you can make money, you can redeposit more money into your account, and in a manner of speaking, that's a reset button. But there's no blowing your live brokerage account and that, just resetting it and magically the money comes back. That's not how live trading really works. When you lose money, you lose money, and that's it. And there's no there's no reset button on a live brokerage account. So I think that prop firm trading is fine, and if you use my referral links in the description box below, but don't go into it ignorant. Number 6, let's talk about a little bit of the technical reasons why you lose at trading. The first one is going to be moving your stop to break even too early. So let me first begin by stating that if you're going for big trades, like 10, 20-point trades, the market's going to pull back on you the vast majority of the time, right? So the ES very rarely moves in 10 to 20 points in clean moves, guys. It just doesn't really often do that. It pulls back. And if you move your stop to break even too early, you're not allowing your trade to play out. You're choking it. You're strangling it. And the only way that you're going to stop moving your stop loss to break even too early is by trading smaller, to where, guys, I understand that it's frustrating when the market initially moves in your favor and then it moves back to break even, and then it can even go all the way back to your stop loss, and you're thinking to yourself, you're angry with yourself for having taken not having taken your profits. But guys, that's just a part of trading. Sometimes the market's going to move in your favor and then it's going to move against you. And what was a winning trade can turn into a losing trade. That's why you have your stop loss, and that's why you need to trade small, and that's why you have to trade responsibly and professionally with a long-term outlook, okay? So you can't move your stop loss to break even too early. I'm not saying not to use a break-even stop loss, but you can't. You really cannot move that stop loss to break even too early, or you're choking your trades. Number 7, so quite simply, guys, cutting your winners too early and letting your losers run. You all know this. It doesn't really solve your problem, but it's just that plain old wisdom that you need to know. Guys, you got to let your winners run further than what you're comfortable with, and you have to cut your losers. So there's no way to get around that, guys. So that wisdom is timeless, and I needed to put it in here. Number 8, so treating your day trading as a professional starting today. Guys, today is the day that you should start treating your trading as a professional and stop expecting 1,000% returns in a day. Stop worrying about what other YouTubers are doing on whatever they're showing on their YouTube channel. Be responsible, guys. Treat it as though you were a professional. Treat your own trading as though you were running a company, as though you were working for a prop firm. Treat your own trading as though you had a risk manager. Treat your own trading as though you were trading someone else's money. If you were trading someone else's money and it weren't your money, would you really be risking 10% of your account, 20% of your account in a single trade, if it were someone else's money that you were managing, how would you be trading it differently? Would you be trading it more professionally? I can almost guarantee that you probably would, right? You probably wouldn't take on as much risk if you were trading somebody else's money, right? You're trading somebody else's money. Oh my God, you don't want to go back to that person and say, "Hey, I lost your money." Even though if you were trading someone else's money, you would obviously have those risk disclaimers in and be like, "Hey, you're trading somebody else's money. They need to know that you could lose their money." Treat your own brokerage account as though you were trading someone else's money, even if you're not, and you'll see some differences in your results. As it doesn't matter how much money you're coming from or how many losses you've already taken, you can always start wipe the slate clean and start fresh. Guys, if you don't change your mindset to treat your trading professionally, you're not going to succeed. You need to treat your brokerage account as though you were trading someone else's money, okay? As though you were a professional day trader and you're managing someone else's money. And I promise you that if you treat it more professionally, you will find that your results improve. So if it helps you guys, don't even pretend like that money in your brokerage account is your own money. Treat it like it's somebody else's, like you're managing someone else's money professionally, and you'll probably be a lot more reasonable in your risk taking. Number 9, trading without a model or a game plan. So guys, you got to watch the markets daily. If you're going to be a day trader, you have to watch price action every day that the market is open. You're going to be more familiar technically with patterns, with where the market is more likely than not to travel in the near future. I mean, that's what day trading is all about, speculating on short-term volatility and price fluctuations. And you have to expose yourself to the market every day that it's open, basically. You have to watch price action in order to improve. And guys, you have to have a model. You cannot go into day trading without some sort of a model or a game plan. I recommend ICT. I like ICT's concepts. It's not a panacea. Just having a model doesn't mean that you're going to make money. But if you don't have a model, I can almost guarantee you that you will lose money. So you have to have a model, but the model is just a prerequisite to improving at your day trading, right? It's not the end-all, be-all. You still have to have risk management. You still have to treat it like a business. You still have to treat it professionally. But you still have to go in with a game plan or a model. You cannot really trade at random. Number 10, and the last thing I want to talk about is overconfidence, guys. So many of you are probably, you're familiar with that feeling of taking losses and being frustrated. But how about have you ever had that feeling where you're taking 6, 7, 8 winning trades in a row? Or maybe you have 6, 7 winning trading days in a row and then you lose it all in a single day. I've had that. That's historically why I lose money. And guys, again, the gambler's fallacy. Just because you won 9 trades in a row or you won 6 trading days in a row doesn't mean that day trading session number 7 is going to be a profitable day. Your past results have absolutely no bearing on your future. Past performance is not indicative of future results, and that is the truth, guys. So your mind can be distorted by frustration through taking losses, but guys, your judgment can be clouded by overconfidence and by thinking really that you're better than what you really are. Guys, that's not to say that you can't become skilled at day trading, but every single trade is a new trade, okay? And you still have to follow your game plan and apply risk management and treat it professionally. I think the best heuristic, guys, is treat your brokerage account as though it were someone else's money, right? Can you justify your trades to a third party? If I were to go and tell someone, a risk manager, for example, someone familiar with the market, these are the trades I took, here's why, and here's the risk that I took. Could you justify your trades to a risk manager? And if the answer is no, I really could not justify my trades to a risk manager, then you're over leveraging and you're gambling. I mean, you're over leveraging, you're not making the right decisions. Guys, treat it as though you were trading someone else's money. Okay, so those are my 10 reasons why you take losses and some advice on how to improve, guys. Today is the day to become a professional. It doesn't mean that you literally have to incorporate yourself and register as a professional. That's not what I'm saying. But you need to treat it You need to treat it as though you are a professional. You need to have a long-term time horizon. Years, guys. Years. You might literally not make any money trading for 1 year, 2 years, or it might be a very small supplement to your income, guys. You just don't expect to make millions tomorrow, okay? You need to take a long-term time horizon in your day trading, okay, guys? Long-term time horizon. Okay, guys, use my referral links in the description box below. I hope that you enjoyed this presentation, and I will be speaking with you again soon. Thank you, guys. Bye-bye.